I love your plaits that you've got in today.
I know.
They look so
For those of you who
cute.
can't see me, I have little pigtails.
So cute.
I don't know what came over me this morning.
I'm like really into
I
it.
woke up with like so much energy and yeah, I felt like today's going to be a good day. And then we had technicals.
You figure out what like you did yesterday to wake up with energy, because that's often what I think. I'm like, what have I been doing the last few days that's made me feel so good?
I don't know.
I don't know.
I don't know. I don't know. Yeah. No, I had a session. I'm seeing this performance and wellbeing coach, and she's incredible. And so maybe it was that. Maybe we had a good session yesterday.
It's so funny because Vic was like, got to work and she was like, now my coach asked me to point at my emotions. It was like an emotion wheel, and it was like joy, happiness, blah, blah, blah. And it's like all the negative emotions, like fear, comfortable, like insecure,
Overwhelmed, worried. I was like,
and
that's
she was
me.
like, point to the corner of the circle that you resonate with. And she's like, yeah, all the negative ones.
Yes. But, at least I am aware of my emotions,
Totally.
conscious. Yeah. But I'm sorry. This podcast should not start with me and my week. I think it should start with you and your week.
Don't. I knew that this would happen because I wanted to brief you on what we're not talking about on this podcast.
I'm sorry, you do not brief me on what I can and can't say on this podcast. But I want to firstly just say to anyone out there that had a crush on Soph, as an ex-boyfriend, or was maybe going to ask her on a date, girls or boys, I'm sorry, but maybe you should stop listening now because drum roll. Do you want to say the news?
No, I think this whole segment needs to be cut out.
Sorry, everyone, but she's very happy. And we can't wait. We've named him Fanboy because he's a bit of a fan of Soph, a fan of the curve.
You've named him Fanboy.
Sorry, I did.
It's quite appropriate, though, because he does listen to the podcast, which is the cutest thing ever. Also problematic.
Also, I haven't even met him, so I'm a bit skeptical.
She's a bit fucked off about it. She's like, I don't know if you can be officially in a relationship with somebody if I've not met them. Like, what if I don't like them?
Yeah.
Like, okay.
I was like, well, you're not dating them, so it doesn't really matter.
Oh, God. And then I got a group call from Flower Man and Vic, and they were like, group holiday? And I was like, oh, my God, calm down.
Oh, no, very excited. Very happy for you because I can see how happy you are.
I am happy. Sorry, I'm just spraying my face with I'm feeling a bit hot and flustered.
Are you feeling quite overwhelmed right now?
Yeah. Feeling a little bit.
What emotion would you point to on the emotions chart?
I would probably point
excited.
Yeah, but also
happy.
Okay, all right. On to the finance, mate. On to the finance.
Yes, yeah. Okay, on to the finance. So it has been a pretty big week in terms of economic news this week, which we haven't really touched on for a while.
Yeah, what's been going on?
So we had inflation news in the US.
We haven't really talked about inflation for so long.
I know.
I kind of thought it was a thing that we were done with.
Well,
not?
We've probably just adjusted to higher prices of things, but it still does impact the stock market. It does impact the economy. But just for context, the S&P 500, so the top 500 companies in the US, they're up 30% in the last 12 months. But this week has been a pretty tough week, and it's all because of this inflation data. So inflation came out in the US, and it was stronger than what people expected.
Wait, so it was stronger as in the inflation was worse?
Higher. Yeah. So it's higher, which means it's worse. Remember, we want to be in that 2 to 3% range because that is a healthy level of inflation that makes people spend but not want to spend or not spend too much, all of that. So yeah, it's a healthy range, that 2 to 3%. Does that make sense? So they've increased 10%, for example, and then now they're increasing at a lower rate. So they're increasing at 3% rather than 10% on 10% on 10%. So it's not like prices have come down. They've just adjusted, or they're not increasing by as much. So that's why we're still feeling the pinch. And that's why everyone, I feel like in the UK, is talking about how expensive everything is. Everyone in New Zealand is. It's a kind of global phenomenon at the moment, is that everyone is saying.
I actually got a message from someone the other day who's actually living in New Zealand. Her friends are over here, probably around the 24 age bracket, and was just like, how are you surviving? So many of our friends are just up struggle street, can't afford really to enjoy themselves, to the point where they're not sure if they'll be able to stay just because it's so expensive. And I know
in London.
Yeah. And I know people in everywhere are struggling, but I mean, being here, I definitely, I bought a lion's mane mushroom decaf oat flat something or other this morning, and it was £5. That's $10 still, And
yeah.
So anyway, sorry. All I was going to say
have a long black, girl.
Yeah,
it's £2.60.
Is it really?
So cheap. Honestly, it's hot water and coffee.
Yeah. I don't really love them. Maybe I have to get into it.
Anyway, so yes. So I guess, how does inflation impact the stock market? Well, it impacts it from, I guess there's a number of different ways, but mainly is that people aren't spending, or like you said, they're feeling it tough. They're not going to be out and about spending on products, and then that doesn't convert to revenue for companies in the stock market. But it also means that if inflation's high, remember the way that you bring inflation back down is through...
Don't tell me. Interest rates go up.
Yes. So this means that we could probably see interest rates holding steady or going higher if this inflation is still really persistent.
And sorry, when you say interest rates, is that only affecting houses? That doesn't affect anything else, right? It's not anything to do with GST or VAT or any of that. The only thing that would be increasing is if you have a mortgage, right?
Or if you have savings in the bank, or if you have debt. So if you have savings in the bank, you're now getting a greater return because interest rates are going up.
So it's actually quite a good time to have, if you would have money in the bank or money in term deposits or things that are traditionally more lower returning, you actually can do better from those things at the moment.
Yes, yeah. So higher interest rates encourages saving.
But why would they want people to be not? Oh, yes, because spending is what brings inflation up, right?
Yeah.
And if they're spending, it's because there's demand for things. And so people are interacting with the economy, which pushes prices up. Whereas at the moment, because they're trying to bring prices down, if people are spending less, i.e. keeping the money in the bank and getting better returns, the point is it brings inflation down.
Yes, yeah.
Cool.
But it's everything's so connected because, it means that mortgage rates are higher. It means that if you've got debt on your credit card, that might increase as well, the interest that you're paying on that. So it does hurt. So high inflation does really hurt. So does negative inflation, but we're not in that camp. That's a whole other story. But anyway, so high interest rates also puts kind of brakes on the stock market because people don't have as much money to spend because they're spending on other things. And they're like, hey, you know what? Instead of investing in the stock market, I can just keep my money in the bank. I can get a pretty good return on the money in the bank. I don't need to put it in the stock market.
Which I kind of get.
Yeah. If I could earn 5 to 6% by keeping money in a term deposit, that's really low risk. That's a great risk reward. So
do you want to just explain that for anyone that maybe doesn't totally understand it? Could be good to just do a quick 101.
So in a normal economic environment, which we're not in at the moment because we've got such high interest rates, but in a normal situation, if you had money in the bank, you'd probably get around 2% return per year, which is pretty low and not much. And that's because the risk of holding your money in the bank is really low. So therefore, the reward is low. And if you put that in perspective in terms of the stock market, when you invest in the stock market, the risk is pretty high, but therefore the return can be pretty high. So this is why over the long term, your return is much greater if you invest in the stock market because you're taking that little bit of risk. Anyway, whereas what I'm saying now is that if you had money in the bank, because interest rates are so high, you're actually getting 5 or 6% sometimes, which is pretty good. And therefore, if I was sitting there being like, oh, I'm a bit risk averse, I don't really like risk, I'm going to keep my money in the bank and not invest in the stock market because the returns are so good. So that's kind of what I'm meaning.
I think what is confusing probably for people is as soon as you say risk, it's high risk, people are like, or you're like, it's really risky. People are like, well, then why would I do it? And I think I was actually messaging a friend on Instagram the other day. I actually am going to play you her message.
My last boyfriend was investing in Bitcoin, say. So I found this forum. I invested $500, which was my only money, gathered all my money, invested $500 into Bitcoin. Whatever I had invested to was a scam, and then it actually just put me off ever doing it ever again.
And I'm like, so I think the thing is people hear stories like that and then they're like, oh God, I'm going to lose all my money because the stock market is risky. And I think I was just like, holy shit, there's so many people that think that. And so every time we say, oh, it's higher risk or it's risky, I'm worried that it means people aren't going to then invest in the stock market.
Okay. Firstly, never ever invest everything you've got. You should have an emergency fund which you don't invest, which you keep in the bank because you will need that at some point. Secondly, if you're going to invest and $500 is all your money, don't put it all into one thing. Don't invest all in one company or all in one ETF or all in Bitcoin. Like that, you need to diversify. And this is why I stress so much, because I don't want people to be put off from investing, because it can be so powerful if you do it right. And I think that is the key thing. Like in hindsight, and it's so easy in hindsight, is that $500 should be invested in across 10 different things, for example. And therefore, she would have only lost maybe $50 to the scam or something like that. So we live in a digital age as well, and there is scams around, and Bitcoin is probably, it frustrates me because people hear stories like, oh my gosh, I made so much money, and then makes people want to invest in it and they don't actually know what they're investing in. And so it has an extra element of risk, but that just means risk is essentially the movement of the price. Like I say, when you look into your bank account, there's very little movement, which means that there's very little risk. If you look at the stock market, it goes up and down every day, and sometimes there's big movements, which means that there is an increased risk. But like with anything in life, if you don't take a risk, you can't get rewarded. Most of the jobs, that are high paying have an element of risk associated with them. If you're starting your own business, that's a huge risk, but it can also be hugely rewarding. And so it's like falling in love. It's a huge risk.
But I think the thing is,
but there's ways, I'll finish that by saying there's ways to mitigate that risk. There's ways
that's kind of what I mean is when you say, oh, the stock market's risky, I think what I'm worried about when I heard from her and I was like, oh my gosh, there must be so many people who listen to our podcast and hear us talk about risk or risk and return and think stock market equals risky. But actually, if you do it cleverly, it's actually not that risky. Do you know what I mean? And I think
it's almost like if you do it with parameters in place and you're really strict in that you do hold it for a long time. You do put that investment in, and with that long-term view, if you do invest in a whole bunch of things rather than just one thing, if you don't put in all your money, because yes, there is risk, if you do those key things, then it can be super powerful. But some people not get desperate, but they'll hear a good story from someone, or they'll put it in something that they haven't researched or they don't understand. And that is essentially gambling, because you don't know what you're investing in. And that is when there is a very high risk that you might lose your money because you haven't invested properly, if that makes sense. Okay, anyway, in other news, speaking of things to invest in and diversifying, there's actually been a huge reduction in the number of companies that are listed on stock exchanges. So over the last 25 years, we've seen public companies. So this is companies where you and I can buy shares, the public can invest in them. We've seen over the last 25 years a 40% reduction in the number of companies that are public. Yeah. So
why so many? Why is there that's not even a short-term trend. That's a long-term thing.
Companies in the US have fallen from 7,000 companies to 4,000 companies. So that's a huge reduction. And the trend is very similar in the UK and New Zealand as well. We're seeing a lot of companies opting to not IPO, so not become public. And that's a function of things like it's very costly, there's lots of paperwork, there's lots of regulation. It's a function of there's a lot of growth in private equity, which means they could get money from elsewhere. They don't have to go to public investors and be like, hey, can you give us some money to grow? There's now a lot of other places that they can get money rather than.
Is that detrimental to the economy? Just because when we always talk about if the stock market's absolutely going down and down and down forever and ever and ever, which is so rare, the only thing you'll be worried about is the fact the entire world's imploding, it's the last thing you'll be worried about is your stocks kind of situation. So does that then mean from a global economic perspective that if we are not seeing more money or businesses, I don't know, how does that sorry, that was kind of sound like a silly question, but I just
no it's right, it doesn't bode well for, I guess, a healthy capitalist society, because it means that there's less opportunities for me and you to invest in, but it also means that companies are still growing and thriving. They're just getting money from elsewhere. But you want a really, really healthy stock exchange because it's a great place for people, buyers and sellers, to come. And it's more of an indication of there's also a massive move to passive investing, which means people are investing in a lot of ETFs. They're not actually investing in direct stocks, even though that effectively funnels through to direct stocks. But people are like, you know what, I'll just buy the S&P 500, which is an exchange-traded fund investing in the top 500 companies in the US, rather than self-selecting or self-picking Tesla and Amazon and all of those. So there's a lot of combinations of things, but
also doesn't that then mean in terms of what you can buy in the top 500 companies in the US or in an ETF or whatever, that you have limited choice as to what you can invest in because there's less options?
Yeah, and it means that if more people are putting them into ETFs, for example, particularly the big ones, it means like a lot of small companies get kind of left behind and more money is funneled into these bigger companies. They become bigger and bigger and bigger, and the smaller ones almost get left behind, and because no one wants to look at them and no one wants to invest in them. Yeah, so
do you think that's kind of then, when you say it's like it lends itself to a capitalist society, is it almost the idea that there's, because there's all these companies that don't need to benefit or bring on shareholders, i.e. everyone can benefit from its success, it means that the really, really wealthy get really, really wealthier.
Yeah, an element
we don't get to take part in that growth or benefit from. Yeah, okay.
Yeah. So that, but then people
selfish,
can invest.
Really.
Yeah. No, it is. It's just, if you have a healthy functioning stock exchange in your country, that is quite a good barometer or quite a good indicator of the overall economy, if that makes sense. So because more companies will want to list on your stock exchange because you've got a healthy, it all kind of flows into the same ecosystem, if that makes sense. So for example, Shell, the big petrol company, is potentially going to delist from the London Stock Exchange.
Good, they can fuck off.
No.
Oh.
I knew you'd say that. It's really Shell. You're like, oh god. But they might list in the US, that's a huge threat to the London Stock Exchange, because they're like, oh well, if Shell's going, because that means that that's one of the largest companies listed on the London Stock Exchange leaving, which means that there's going to be less shares to buy and sell on the stock exchange. There's less money going into the London Stock Exchange. There's less people investing on the London Stock Exchange. And it also might start a flow of other companies leaving. And that, again, is bad. So BP might decide to be like, hey, you know what? I'm actually going to leave too, because there's not enough people or enough demand or enough money here in London, on the London Stock Exchange, for me to make it viable to stay on the London Stock Exchange. So I'm going to go to the US as well. And then the US just gets bigger and bigger and bigger, and then London gets left behind. So honestly, there's like so much going on here, but it's quite interesting that, yeah, we've got a real lack of choice, an increasing lack of choice in what we invest in, unfortunately, with what's going on with stock exchanges around the world. So yeah, if you've got a lot of companies IPOing as well, is really, really good, because it shows a healthy economy, like an innovative economy, because people are, new companies have been created and they're going public, and it creates excitement and capital, new capital, people investing in new companies. And so when that doesn't happen and you've got more companies leaving stock exchanges, that's when you get that imbalance, and it's it's a really bad and unhealthy outcome. So it'll be interesting to see what happens there. Lastly, because we have been talking for a while now, is Crocs. So their share price is up 40% this year. So that's in like less than 4 months.
Shit, that's big.
Yeah.
What's going on? Have they brought out some more platforms for me to buy?
Yeah. Actually, do you know those giblets? Those little things that you put on the Crocs?
Is that what they're called? Giblets?
Yeah, giblets. Yeah. I bought my niece and nephew some. And they are honestly the best gift. If you're ever looking for a gift for young kids, those giblet things are just like, also I just loved choosing them. I was like, oh, I'm going to
Are they honestly called giblets? That's the stupidest word ever.
Yeah.
Giblet.
Why? Giblets. Do you know how much money they made on those giblets last year? $300 million on just the giblets.
The giblets, for God's sake.
Wild. Like, imagine if you were in their team and you were like, hey, why don't we create some little plastic things that you can stick on the Crocs? And everyone's like, yeah, genius. And then $300 million later, you're like, wow, I definitely earned my job.
And I mean, also the age range, like your nieces is like 4 and I'm 32 and I love them. So, you know, they've really got a broad market.
Broad market share, yeah. Anyway, Crocs has been a public company actually since 2006 and their share price was around $13. And when I say, Sophie, hold for the long term, take a long-term view, Crocs is a great example of this. So its share price pretty much did nothing from 2006 to 2020. So, and then it took off from about $13 to $180. So
Holy.
You would have had to be waiting for 14 years before anything really happened with Crocs, which is a long time. But yeah, now it's trading at about $130. So still up there, which is pretty good. I just think it's absolutely crazy that there's $300 million that's been spent on giblets. That's just nuts. Nuts. Another fun fact for you on the Crocs front, they sell nearly 4 pairs of shoes every second. Wild. Sorry.
It's all right. You've been really good on that word. You've hardly used it lately.
I know. Yeah.
You've moved on to different things, which I'm not going to point out because we're not in a
crazy.
Yeah.
Amazing.
No, but the thing is, wild was one of those things that you just said because you couldn't think of anything else. You don't even really like the word that much. It was just always coming out. And I think as soon as I pointed it out, you were like, oh, yes, I do. So I think the occasional wild is fine. Not that I'm one to speak. I do need to expand my own vocabulary. When I hear people who speak with beautiful words, I'm like, oh.
Yeah. When we have guests on and they use big words, I'm like, oh,
yeah.
amazing.
And you're like, I need to get better. Actually, fanboy, lol, taught me orthogonal. I think it's something to do with straight lines and curved lines. It's something to do with like landscape gardening jargon. But anyway, I love it. So now I'm like, oh, orthogonal.
Orthogonal, that's orthogonal. I'd love you to use it in the wrong context.
I probably need to, get the description of it right before I try and drop it into combo. But that's like, how fun is it to pick up a new word and then actually start using it?
I love it.
Maybe we do word of the week at the Curve.
That's a great idea. I feel like number of the week is probably more appropriate because we're a finance podcast.
We get enough of that shit.
It doesn't really work.
Nah. I reckon we do word and let's alternate. Sorry, okay, we can take this offline.
Okay, maybe I'll come up for a word with you and you come up.
Okay, and then we have to insert it in a conversation that week. I love this.
And maybe you should come up with a loud budgeting thing as well while you're at it because we're already into April.
Fine, I will. I'll come up with one for next week.